RationalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich.
All right. Hello, everybody. Welcome back to another episode of The Rational Investor. This is Julian in a red shirt, just out from the sauna, and I dropped some water on myself. Hope you guys are doing well. Sorry I'm a little bit late. You know, I usually like to start 5 to 8 minutes late. Actually, originally today, I was going to pre-record it, but I was kind of tired, so I was like, I'll just take a nap, and then I'll do the show at the normal time for you guys. I don't know what exactly we're going to do going forward, but every week I'm going to try to have like a targeted topic we're going to talk about, and I may or may not do a live show on Thursdays. Anyway, I just wanted to update you on that. Hope you guys are doing well. A lot to talk about today, especially I'm going to go into, I'm sure you guys have heard about the TRI breath, right? And how well it's doing. Well, I spent the last 4 days, probably a good 20 hours, manually backtesting the breath from the past 6 months, plus the past year with some new strategies. I have 2 more I still want to try, but stay tuned because I'm going to go over those maybe somewhere in the middle of the show, maybe near the end. I'm not sure. I'm going to do my normal spiel, and then maybe at the end, for anybody that's interested, I'll go through all the backtest results. Some of them are absolutely incredible. Like, I mean, in some cases, if I followed a couple strategies that I backtested here with just literally taking the breath signals from our Pro Tools, some of my portfolios would be higher than they are right now. It's really, really incredible stuff. Okay, I'm going to shrink myself. You guys don't care about my face or my red shirt or the water I spilled on it here. So I'm gonna shrink myself, and then we're gonna just jump into what's going on with the market, everything that's happened, and some interesting stuff that I want to talk about today. All right, let me shrink. And talk in the chat. It's fun when it's live and you guys are talking. Say hi. Hello, Zalk. Hello, Nora. Chris. Hello, Coke. Hello, Jay. Click the like button. Make comments. Blah blah blah. Okay, I'm gonna get rid of this little thing, and we're gonna jump right into this. So here's the breath year-to-date results from about a year of trading, a little bit less, more like 10 months. I have updated results over here that we're gonna go over later in the show. You guys want to see this? It's exciting. Okay, but before we get into that, I want to touch on some other more pressing matters. One of them being the investor sentiment survey. So we're at 45% bullish, the highest we've been all year. I talked about this last week. We've only got 22% of market participants bearish. Now keep in mind, this is a contrarian signal. So this is a warning. This is saying, okay, you know, if the market was going to finally go down, it should happen somewhere around here. The question is, when? When is it going to happen? Are we going to keep going up in this vertical turbo move for another 2-3 weeks? Or are we going to turn around in the next 2 days? That's what we're here to find out. But I want you guys to keep this in mind. Okay, advertisement, blah. Let's go here. Let's see the news really quick. Let's look at open interest while the news is loading. So I always talk about the open interest chart. Massive call wall at 4,400 and 438. Massive call wall. I think we're at, where are we right now on the stock market? I think we're actually above. Are we above? We're at 44.06. It's impressive. Very impressive that we're this high. I wouldn't be surprised if we get pushed back and close under 4,400. Just because of that massive call wall. Why would they give credit to anybody who bought all of those calls? Like why do that? It's a big OPEX, monthly OPEX closing. It affects the markets. It makes sense that they pushed it up here. Perfect max pain level. 43.80 would be actually the perfect level. So it's got to pull back a little bit, but maybe they wanted to take out the highs here. You can see also if we scroll back. So I wanted to touch on that. Let's go to the calendar here. Okay, so we had Powell yesterday, FOMC statement. Fed kept the rate unchanged. Press conference. Everybody paid attention to that. That's old news now. Now we've got okay, Friday, and then we've got today. So what happened today? We had core retail sales came in line. Empire State Manufacturing Index came in at 6.6. That's interesting. And retail sales at 0.3x. Unemployment claims. Unemployment claims came up again. Okay, so this is a big one that I've been talking about, right? Unemployment is something that we see start to spike near the end of the cycle, where before the market finally starts to roll over. As unemployment spikes, normally the market then starts to roll over. That's the last metric that we're looking for as far as fundamental indicators to determine, okay, are we going to finally get some kind of market crash? Well, unemployment now is finally spiking for the second week in a row, where we were expecting 246 and we get 262. Quite a bit of a spike. I mean, we can look at the graph, right? So you're seeing a bit of an uptick versus what was forecast, just like how you had back in, right? So here's COVID. Look at COVID, right? Here's your 2020, March 2020, and then a big spike. But COVID was almost like a freak event, right? So I don't even know if we can use that. Maybe we have to go back further. Let's go back to 2008. So here's 2008 when unemployment started spiking, right? 2008, January 31st, 2008 is when you finally saw a noticeable spike in unemployment, and then it really took off in July. So started to slowly trend. So this can take a long time. Let's look at what happened to the market. Let's go to 2008. Let's look at January 31st, 2008. Daily chart, 3-day. Let's go to a 3-day chart. I'll make it full here. Okay. 2008. All the way back. Our last big crash. What? I don't even have the data. How is this possible? Really? All right, wait. Let's see if there's another one. What am I using right now? Seriously? It doesn't go back to 2008. Does anybody know a ticker that goes back to... I can't believe this. All right, so we'll just use the SPY. It's good enough. $2016. Okay, 2008. Here we go. Let's go to a 3-day chart. Go all the way back. Okay, 2008. Here we go. So January 2008 is right here. January 2008. So here's January 2nd, 2008. When did we get our first spike? January 31st. These are really low numbers right before. It's very strange. Hard to... I wonder if I can turn this into a line graph. Yeah, let's turn this into a line graph. So I would say the actual noticeable spike started to happen in October, when you had a bit of an uptick here. You started to uptick in probably October 25th. So let's see, what does that align with? So here's October right here. And then you can see we had our initial rollover, then we pumped back up, and then we had our big rollover post December. Go back here. Okay. And yeah, you can see for some reason we got a huge dump in unemployment right here, and then the big spike, and then it really took off in July. That's when it really started to take off. And where was the market by July? Yeah, it was down here, right here. You had your spike, August, and then finally in September, things started to really fall apart. So here's September spike. So here's your obvious bear market, and then here were your early stages. So you can see how it kind of aligns. Not perfect, but it does align, and it's an important metric, I think, to pay attention to. Hello, Edward. So if we go back here, right? Let's go to current. COVID is ridiculous. You can see, right? So it's kind of the same as 2008, right at the beginning, before things really started to roll over. You can see, like, right? You guys see this right here? Let me zoom in maybe on my screen. I want to make it like very clear. Okay, you see that? We've got a nice W that came in, and things took off, and we're starting to form another W. We just have to head a bit higher. See how we based all of 2022? It's almost like a stock, right? So we had a massive pullback, basing, and now it's time to spike. We're possibly creating a W here. Maybe I could apply a chaos theory on this and we can see where it'll go to, because it is possibly a chaotic system, right? I mean, not possibly, it is. Anything connected to humans is chaotic. Let's go back to 2008, right? So here's your little W, right? And then your initial rise. There's your weird pullback and then big pump, right? Here's the start of it and then boom, take off. So steady trend upward. I think it's very similar to what we're seeing here. So something to keep in mind. I'm sure you guys have seen these statistics published everywhere, but I just wanted to show you the correlation. So there's that, plus the investor sentiment survey. Those are my two bearish cases that I'm seeing from a fundamental perspective. Now on the other side, we have a lot of bullish cases as well that I want to show. Oh, by the way, I've mentioned a couple times how I thought that on a couple shows before that I've thought that the options max pain on maximumpain.com is incorrect, but it turns out it is 100% correct. I checked against Swaggy stocks and I checked against bar chart, and it's I think they're literally pulling the data from bar charts. It matches almost exactly. So I think it is correct. You can use it. You should have no problem. So just something I wanted to mention for anyone that's been like paying particular attention. Oh, I don't want to show the breath tool thing yet. Okay, let's go back to the market and let's go to the current time period. Let's turn off some of this stuff. Why is my super trend on? Okay. Let's see. Look at this huge run. So ridiculous. Okay. And I want to look at the SPY, by the way. This is so absurd on this chart. By the way, if we use chaos right here, right, this is kind of like a W. So if you use chaos right here, we're basically tagging the 1.618 level, which is often works as a resistance. So keep that in mind. We are tagging the first level, assuming this is a massive W breakout and our final target is 554 up here, which is, it's a real possibility. It is. It just is. This is the first real like stopping point where you're going to get a pullback, you're going to get some oscillation. So something to keep in mind up here. Let me go to SPX. I don't want to use this. Okay, so here's our uptrend, right? Let me go to a daily. Although you see on a 3-day, we do have an 8. We're hitting an 8. Let me go to a weekly. On a weekly, you can see the RSI massively broke out over here. So it makes sense that we're pushing very high from an RSI perspective. Anytime this happens, the market pushes very high. Stochastic RSI has been extremely bullish since 4,200. Even our breadth, the TRI breadth indicator has been extremely bullish. So if you just traded off that, you'd be up quite a lot right now. You can see on a 3-day chart, we also broke out and moved higher. And here's my ABCD pattern that we already hit and then surpassed. Also, we had, oftentimes whenever there's a consolidation, you can draw chaos levels off of it. And you see how I lined up our 1.618 tag along with these bottom levels right here. So I try to line these tags up to all 1.618, 2.618 are the big levels, 3.59 sometimes. Our final chaos level is right around this area. You never can get it exact. But I would say we're basically there and tagging the final level that chaos pointed to. So we've got an ABCD tag and we've got a chaos level tag. Something to also keep in mind. However, if we go to lower time frames, I don't see anything to indicate a pullback just yet. Is this overextended? Yes, definitely. But does that mean it can't go higher? No, it doesn't. I do think we're reaching the top. So again, something to just keep in mind. One other thing I want to look at is this. Wait 1 second. Yeah, we also tagged. I don't think it is. It's really not. I don't know. I'm trying to see if this is a 5-wave series. It's not really. If it is, it's a very messy one. But you could make a very, very slight argument that this is This was basically the completion of a 5-wave series, although it should have then pulled back and it just kept going higher. So just ignore that. But we did tag the 4.669. So something else to keep in mind. However, the trend is intact, so I'm not touching any shorts right now. I'm just waiting, mostly on the sidelines. I had some longs that I took profits on. This was one of them. I talked about this before on Peloton. So Peloton hit my price target, and you can see we're reversing. I sold everything actually. So nice to see that I sold it at exactly the right time up here at 9:50 or so. You can actually see, where's my phone? If I had my phone, I would show you the sale. I always have my phone with me. I don't know where my phone is. I was in such a hurry to like get on this stream. I don't know where I left my phone. But I bought Peloton. I talked about it on the previous show. I bought it down here, the $7 range on the initial breakout right here. So on a daily chart, you can see we had this picture perfect breakout right here. So I longed here at 720, and I think I bought some more at 750. And then I sold when we tagged 2.618. I sold half at 850, and then I sold the rest right actually here on this day when we tagged my 970. You see I had an alarm set, pending cross of 965. I got my alert and I sold. So I sold the rest up here, and you can see now we're reversing. Uptrend still intact actually on it. It hasn't fully broken down yet, but I just wanted to let you know that this was one, trade that met my setup criteria, and I took profits. Could it go higher? Sure, it could. But it hit my criteria, and it makes sense that it's pulling back now. I wouldn't be surprised to see the same with the S&P. Again, I want to see a breakdown of this 4-hour chart, and then I want to see a breakdown on the 4-hour chart here before I can really get short though. So I'm not touching anything right now. Let's take a quick look at VIX. So interesting with the VIX that it looks like if I have to say, this looks like it's bottoming. It looks like it's forming a nice little W here. And if it can break above this, we can easily spike back up to 20. I don't see why that can't happen. Now, longer term, I'm talking now, everything I'm talking about is just like on a 4-hour chart. So it's shorter term. Longer term, 3-day, weekly chart, uptrend, very strong, very much intact from the technical standpoint. However, I showed the fundamentals. There is a bearish concern there. Too many people are getting bullish. The market at least needs a decent pullback to take out all of these over exuberant bulls, let's say. And that makes sense with this 7 and 8 coming in on a 3-day. You can see the last 3 times this came in. Look at this. By the way, do you guys notice how my background signal indicator went green here? So if you went long here when this came in, you would have made a decent amount. If you went long here when this came in, you would have done well as well. So this is still a very useful tool to keep me from being too bullish or too bearish when I shouldn't be. So this was, when this turned on here and here, it was a huge indicator like, okay, Julian, stop being the perma bear. Stop. So big indication to me, although I was still a bit bearish, as you guys know from the past weeks. I do tend to lean on the bearish side, and I know that. And I admit that so that you guys can keep me honest and say, like, Julian, maybe you're being a little bit too much of a perma bear. So you can see this 8 is coming in, and we do often get pauses. So the last 3 times it's come in, we topped here back in August. We topped here back in February. And then we had a pause here in April. Didn't have a pullback, had a slight pullback. There was a pullback. If we go to a daily chart, right? The 50 EMA has provided decent support. Sometimes you break below it, but it does provide decent support. So a pullback back to this 4,200 level wouldn't surprise me. We could pull back as far as 4,000 actually. You could do something like this, and then just like tag this, and the uptrend would still be intact. There would be no destruction to the uptrend. Yeah, Chris, the green-red indicator is a custom indicator, Julian BGC trend signal, where it basically tells me if the market is in a strong trend and if we're moving to the upside or the downside. So you can see when it's red, strong trend to the downside. When it's green, strong trend to the upside. And when that's on, it tells me, okay, I can consider taking riskier trades that are in the direction of this background signal indicator. It also tells me like if I'm I'm in the totally wrong direction. So now I have this, and I also have the breadth indicator. Those are my two keep me honest indicators. So you can see when this turned on, I could have easily looked at like a 4-hour chart, right? So this turned on here, and I could have looked at a 4-hour chart, and I could have said, okay, let me enter on an RSI break on this 4-hour chart. So the RSI break happened here, and my entry would have been here at this 4200 area, and I would still be holding long right now if I followed it, but I didn't. So yeah, I just have my pull open trade. I don't really have anything else too crazy. I will start taking some trades in the breath now that I've done all these back tests. I have some stuff I'm really excited to start trading and share with you guys. Some portfolios maybe we'll set up you can follow. I'm going to test it a bit on my personal portfolio, maybe do a bit of maybe a month, 2 months. And then we might run a public portfolio. We'll see. Not 100% sure. But yeah, it's one of my keep me honest indicators. Yeah, we can look at Litecoin. We're going to get into crypto in a bit. I just wanted to go through a couple things with the S&P. I think the legacy market is really important to pay attention to. I think we have to keep in mind that Powell was quite hawkish yesterday. I don't think he likes seeing the market this high. This does nothing for getting inflation lower. Inflation is at 4%, and it's on track apparently to go to 3.2%. So the problem is that this is too much liquidity, and the system it's too hot. They need things to really pull back to get to their 2% target. And I think the market being this overbought is not something that the Fed wants to see. So something to keep in mind from a Powell perspective. All right, so that's the S&P. Let's look at individual stocks. I would go over in the after party. We'll do an after party today. It's not going to be a long after party, but I will do one. I know last week we didn't. We're about 20 minutes into this. Wow, 20 minutes in. Okay, so let's jump into. So that's the S&P. Let's jump into crypto. I made a bunch of posts on crypto in the Discord earlier today. So I'm just kind of gonna reiterate about those, and then I think we'll wrap up the public show, and then we'll jump into the after party where I've got a bunch of crypto names I want to go over. I have some stocks I want to talk about, and you guys, of course, can ask any questions that you want to ask. Here is Bitcoin, okay, on a weekly. Well, here's a weekly chart. Let's do a 3-day chart, and you can see on the 3-day chart, RSI, we look absolutely terrible. This is a disaster, complete and utter disaster here. Stochastic RSI looks terrible. I thought that we would complete this fifth wave. I thought we would move higher, 34,000. I'm not so sure about that anymore. We look really bad on these lower time frames. If I draw a daily, though, interestingly, it hasn't really been a breakdown on RSI. If I connect these 2 points, we're still almost at a support level. But stochastic RSI looks bad, and I've got these two scenarios. This is pretty much what I'm seeing here. So if we do break down, we'll tag this 2.618. We'll play in this area a bit, and then there's potential to go down to 20K. And that's where I think we'll sit for a while, and you could fill orders if you've been waiting for a while. That's the one scenario. The other scenario is that we go down a little bit lower. Maybe we take out these lows right here. I don't see why they wouldn't take out the lows here. A lot of liquidity at 24,000. Take out 24,000 and then bounce. And we head up here to my fifth target at 34,000. Those are kind of the two scenarios for Bitcoin that I'm seeing. Here's the issue, though. Let me show you total. This is something that I found gives more accurate signals. Total completely broke down from its uptrend already, and RSI looks like absolute garbage. This is your RSI. Absolute garbage. I've never seen an RSI that looks this bad, and things just completely reverse. We are at a 2.618 support, but the final target for chaos from this M, so here's our little M, right, that fired. I want to show right here. M, perfect little M right there. This fired, and I'm tracking it, and you can see 1.618 was here, provided nice support where we oscillated in this area for almost a month. Let me snooze my, hold on, snooze, okay, so I don't get notifications. We oscillated for almost a month in this area, and then finally we rolled over, and you see how quickly we moved from 1.618 to the 2.618, And now we're sitting here. I could see us sitting here for a bit before we finally roll over and hit the final target at 4.669. But once you hit 2.618, it's iffy if you hit the 4.669. I've found in some scenarios you don't always hit it, but from a liquidity standpoint, I think this is a huge area where the market could pick up a lot of liquidity. I really think it could. I think it could scare a lot of people. I just don't know what other bad news can come out other than, legacy markets rolling over and then crypto rolling over with the legacy markets. That's what I could see happening here. So that's the big thing I wanted to point out about the difference between total and Bitcoin. Is total looks a lot worse and often, in my opinion, provides more accurate signals. Can even go to like a 3-day, and you could draw like an ABCD here, and then here's your second ABCD a little bit lower, like that, and then it gives you a target around this 3.59 level. Not a huge pullback, but a bit of one versus the 16%. 16% would be big. Let me look at total 3. Total 3, I remember, looked really bad. Look at how much total 3 has pulled back. Absolute disaster on a 3-day chart. Weekly chart also doesn't look great. Daily chart, very, very bad. Almost in an oversold area. But you can see when it gets this low, it kind of just sits there and consolidates. And even when it heads up, it breaks down again. So we could get some consolidation, and we did have a bit already. But whenever RSI is this low, it's not time to buy yet. You want to wait for that second low. You want to wait for some kind of consolidation, and then your second low, and then you can buy. And that's what we got here with nice divergence. You want to see that divergence. But it is a nice level, and I can see why some people might want to buy here. But oh my God, imagine if this breaks down further. Imagine the pain, the smell from people being just destroyed if you get a breakdown on alts from here. This is the lower cap alts that they can manipulate pretty easily. I mean, let's assume that this is kind of this was your distribution zone. If this was your distribution zone, this is your 1.618. We're tagging our 2.618. See how that perfectly lines up? 1.618, 2.618. And then this is your final 4.669 level. How much of a drop is that from here? It's almost 25%. Imagine the pain. I think there's people that are already feeling a lot of pain that may capitulate and exit if we go lower. I don't see why that couldn't happen. Let me see one other thing. Let's pull this all the way down here. And I'll reverse it. And pull this all the way up here. Okay. 886 level is there. 786 level is here. Oh, interesting. That's about the bottom of the range. I don't see why we couldn't pull back further. We could even go down to this 886 level. Why not? These previous highs. This is kind of the only... I mean, you've kind of got... I'm trying to look at where on this chart do you have support? Let's see, where are our support levels? So you had a support here, right? Previous highs. So that makes sense. And then you had here. And then you had something like here, probably as a major support. So those are kind of your zones. I almost want to call this a zone. I hate making exact levels. I think zones work better. So something like this is a big zone, right? That. And this was a big zone. And you see how we sat in this. This was a huge zone here. So you see how we sat in that zone for a while. So your only other zone is right down here, which is a bit below the 4.669. I wouldn't be surprised if a lot of people are waiting for this 200 billion zone, and instead we only go to 225 billion. And everybody loads up here and front runs, and anyone waiting gets left behind. Wouldn't surprise me. obviously. So to sum it up, crypto but is bearish. Everything indicates bearishness, massive bearishness. I don't recommend any longs here. We exited in the Bitcoin portfolio that I trade for TRI. I exited Bitcoin at around 30,000. I haven't made a single trade since then. If I did, I would have posted about it. I would have told you guys about it. And I haven't. I'm just waiting in cash. The portfolio is long only. And I haven't had a single long signal in what feels like months now. Just been sitting on the sidelines, waiting and waiting and waiting. Basically since the beginning of April. So 2 months of doing nothing. So that's crypto. Hopefully that makes sense. Bitcoin looks better than a lot of other things I'm seeing. It just does. Ethereum, really quick. We are sitting at I think the last I looked at it, we were sitting at the 200-day moving average. Yeah, we're right on the 200-day moving average and holding this support. So Ethereum does have that going for it. It didn't hit. It's basically at the 1.618 level right there. Let me just make sure this lines up. Yeah, 1.618 tag support. So 2.618, it almost hit, not perfectly. I kind of like to be on the conservative side, so we can move it up a bit and say it hit and say that this is our final level. I'd rather be a little bit more conservative and hit my targets than miss them, just because I was being too strict. So I do make small adjustments. 1388 is the chaos level target, and you can see there's a lot of support down here, and that's kind of where I want to see Ethereum go to, but it is holding support. How much of a move is that? It's about 15%, so about the same as everything else we've kind of looked at. Yeah, it doesn't look good on a daily at all. 4-hour chart, just sitting down here. I can't really get too bullish on it. It just doesn't look good on these higher time frames. Even a weekly. Let's look at the weekly. Did we break down? Yeah, we broke down. Yeah, like this. So that was June 12th. We've got another 3 days to see where this closes. But even if it closes higher, we would have to really take off to get back within this uptrending channel. So not a big fan here. I'm trying to see is there some kind of bullish case, but it's hard to say anything when oftentimes these reversal moves, like where it looks good on a lower time frame, they end up being fake outs because in the higher time frames it's so bearish. Like on this daily chart, this is absolute disaster. I mean, maybe we can bounce from here. It's possible, right? Support. But for my particular strategy where I trade RSI momentum, I need to see on a daily chart, I need to see price W on RSI and come on the other side of this trend line. And then I can start to get bullish. So a bullish scenario would look something like this. Really quick. Do something, take out that low, and then, you know, we move higher. And with RSI, it would do that. And we tag this and then do that. So that would be the scenario. But unfortunately, it might just do something like this. It'll go like this. And then like that. And I'll have to enter up here. That's a potential other scenario. But my ideal scenario is the first one I drew, where it looks like this on RSI in here. Okay, so that's crypto. Hopefully it makes sense to you guys. Leaning bearish. However, a lot of things are at support. So I gave you the two possible scenarios. I wish I could say which direction it's going to go in. Been quite bearish, been sitting on the sidelines, just kind of waiting. I think a lot of it depends on legacy markets. It's impressive how terrible crypto is doing, considering how well legacy markets are doing. And I'm concerned that the catalyst for crypto rolling over further to hit my downside targets will be the legacy markets rolling over. But I can't turn bearish on the legacy markets until I see breakdown in certain indicators. I'm seeing things that are making me bearish in the fundamental indicators, but the technical indicators are not there yet. They're still bullish, so be careful shorting. Okay, hope you guys enjoyed the show. Hope you have a great rest of the week. If you're a part of the TRI community, oh, I forgot. I almost forgot to show my backtest results. Okay, wait. Before I close out, let's do the backtest results really fast. Okay, so breadth data. I backtested on, oh, I didn't update this one. So I have another sheet, but I didn't update this one. The biggest one, the one that performed the best for trading the SPX using 0 options. Okay, this was trading on an account where someone doesn't have access to any options and they can really only long things and they don't have access to margin or anything like that. You can trade for 3x, XPSL, XPXL, and XPSS. So we did that. And originally we had data only up till September and a little bit of November before. And you can see how we talked about that here, how it returned 115%. That was when we only had data up until November of 2022. Now we have data up until June of 2023. And yes, I went all the way up until basically today. And you can see here, how did it do? Look at this. It only had 1, 2, 3, 4 losing trades. Only 4. 4 losing trades. Count. Let's change it to count. And it had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 winning trades. 10. Pretty good. I would say a pretty good ratio. Let's say equal 10 divided by 14. So 71% win rate. That's incredible. I mean, this trade alone, if you traded with a $10,000 portfolio, $30,000 portfolio, this one alone would have paid for the pro subscription many times. By the way, considering how good these results are, and we've talked to a couple people, we might have to raise the price on this. It supposedly is way too cheap. So just something to keep in mind. Anyway, okay. So what percent are we at now? We're at a 75% win rate, and we're at an insane 436% return, cumulative return, if you reinvested all of your profits every time. So the original one that we shared here was not a cumulative. It was 10,000 invested every time, and then you took the profits out. You ended up with these values. While if you did a cumulative investment where you just reinvested your entire portfolio, all the profits every time, you would be at 436% return, versus if you just did, I think you're at 192% if you just invested 10K every time, 10K plus reinvest. So that's a cumulative. I don't have the only 10K reinvestment every time one. I'll have to show it maybe next time. The one other one I updated that you guys will be excited to see is Bitcoin. And you can see here. So we've got a couple different investments. Here's cumulative, where you only use 10K each time. Here's 10K compounding, where you reinvested the whole thing. And here's using 2x and 3x margin. Now, this includes fee calculations. And you can see, at least with Kraken, we were using Kraken fees. You can see how the fees get out of control. They're very high, depending on how long you hold. $1,000, $400. It really hurts the profitability. When there were no fees, this thing was insane. But fees really hurt it. So if you can find a no-fee platform, it works a lot better. But I don't think that exists. So cumulative 10K each time, you returned 308% if you traded the breadth for the past 1.5 years. Since February of 2022, I think. When did we start this? When is it starting from? December 2021, basically the end of December. So we'll say the beginning of January. So about a year and a half now. If you just traded $10,000 every time and took out the profits, you would be at $300,000, 300% return. If you reinvested the entire portfolio every time, 0 margin, 600% return. If you did 2x margin on your portfolio, you'd be at 1,666.7%. Kind of an ominous number, that 1,666.7. I don't really like that 1.66. Maybe just stick with 1x. I think it's enough performance. The 3x, ironically, made less than the 2x. And that was simply because of the cost to hold 3x and how much you have to pay in fees every day. It actually caused you to lose money in comparison to if you just did the 2x. So something interesting that came up when we were kind of trading this. And it seemed like the 2x is actually better when you account for fees. So that's Bitcoin. the performance is astronomical, completely insane. I also have done absurd backtesting on options, and I've got more I'm going to backtest on. So here's the options from last time. I haven't added the results. It's in another messy spreadsheet that I will maybe show next week when I have more data. Anyway, just wanted to show it. I think it's pretty cool. We'll go over it more next week. I'll post some stuff. We're going to start trading some very serious portfolios at TRI with some of this stuff because it seems to be doing exactly what we had hoped it would do. Even better, actually. I would have been happy with even just 100% return over 2 years. 50% a year would have been great. But this is kind of insane. So yeah, okay. Anyway, if you're a member of TRI, I will see you in the after show. If not, thank you for tuning in. Don't forget to hit the thumbs up. And I will see you guys on the site. And if not, I'll see you here next Thursday. Same place, same bad time. All right.